Okay, I'll start the recording, and before I share my content, let's start with a prayer first. So let's remember that we're in the holy presence of the Lord, and the Father, the Son, the Holy Spirit, and Amen. Dear God, thank you for looking after our school, De La Salle University Das Marinas. Thank you that you love each and every one of us here. Help us to learn together, to play and share our learnings, and so that the wonderful world you have made becomes more beautiful every day. This we pray in Jesus' name. Amen. Amen. Saint John Baptist de La Salle, pray for us. Live Jesus in our hearts forever. Okay, so let me now share my content. So again, good afternoon. We are in Module 2. So we've started Module 2A, the first part of Module 2, last Saturday. And the synchronous meetings have been, the recording of synchronous meetings have been uploaded in our school book. So just please try to watch that so that we'll be able to save time. And aside from that, we have discussed several topics already. So we started with this, the concept of decentralization, goal congruence, and sub-optimization. So this is actually the underlying concepts of responsibility accounting, which is the underlying concept naman of our Module 2, strategic performance measurement. So the concept of decentralization is that all the decision making is actually spread out throughout the lower level managers. This is in contrast with the concept of centralization, wherein all decision-making authority is being centered in one person. So most of the time, it's the president or the CEO. And when we decentralize our organization, there are certain advantages and disadvantages. And one of the major disadvantage of decentralization, since we're allowing our lower level managers to decide on matters, is sub-optimization. So what is this sub-optimization? This sub-optimization is actually um, the scenario wherein the objectives of the lower level managers are not aligned with the objectives of the overall company. And for us to be able to minimize the effects of the sub-optimization and make our organization with goal congruence, we need to employ what we call, sorry, yeah, we need to employ what we call um, responsibility accounting. So this goal congruence is naman the opposite of sub-optimization, because this goal congruence is the scenario wherein the lower level managers are the objectives of the lower level managers are aligned with the objectives of the overall company. And the concept also that I would also want to teach you is the concept of motivation, di ba? We are all motivated to do something, and even in business, there's a certain motivation. So, what is this motivation? This is actually the desire of being able to achieve a goal, and that's goal congruence. Okay, so that's the desire. So, kailangan kapag motivated ka, you should have the desire. But it's not just about the desire, but also you need some action. You need some effort. Okay. So certain management control system are actually employed to make sure that our clients or our managers are motivated in the right way, in the proper way. So for us, again, for us to address this sub-optimization, we need to employ what we call responsibility accounting. And in responsibility accounting, we need to separate different types of responsibility centers. These are cost center, profit center, and investment center. And sometimes there are texts and the authors which also include revenue centers. So apat yung responsibility centers natin. And determining this responsibility centers into what type of responsibility center would depend on two things: their responsibility which is cut into controllability and accountability. So they should be able to control it, and they should be able to be accountable to it. So like for example, for cost centers, you can say that your department is a cost center if you have control and you have accountability for cost, di ba? For profit center naman, ang controllability mo at accountability mo revolves around revenues and cost. Meanwhile, for investment centers, your accountability and controllability would depend on um, your costs, revenues, and investment. So the other concepts that we discussed during Module 2A, the first part, is how do we measure the performance of these responsibility centers? Because since we are allowing them to make decisions on their own without, of course, the say or the approval of the upper management, we need to make some control system. So how do we measure that they are doing the right thing? So for profit center, we are saying that for profit center, we're saying that we need to do segment reporting and analysis. So we learned here in segment reporting and analysis that we should follow two things. It should be in contribution format, and aside from that, the fixed cost should be cut at least into traceable, or sometimes we call it direct costs, and common, or sometimes we call it indirect cost. But some text, we even break down the traceable fixed cost further into controllable and non-controllable fixed cost, so that we determine the performance margin. So when we say performance margin, this is actually the controllable margin is actually the manager performance, while the segment margin is actually the segment performance. So for investment centers naman, we learned in Module 2A, ROI, residual income, and EVA. So how do we compute for that, for them, and what's the relationship with each other? Because each performance metric, the return on investment, which is broken down into margin and turnover, residual income, and EVA, would have similar components. And then also sensitivity analysis. So when we say sensitivity analysis, what would be the effect in ROI, in residual income, and EVA if assumptions would change? So yun yung sensitivity analysis. And most of the time, when we do sensitivity analysis, we do relevant costing, incremental analysis, differential analysis. So we finished up to these three items. So for this afternoon and later on tonight, we will be expanding further the computation of cost of capital, which is the weighted average cost of capital, which I believe you have already learned in financial management, but we will further strengthen it. Why do we want to learn weighted average cost of capital? Because this is essential in our computation for EVA. And we know that EVA is just the excess of the net operating profit after tax from the cost of capital, which is computed as invested capital times WACC. So most of the time, WACC is not given, and we have to compute for it. So how do we compute for that? So we'll just finish this last item in Module 2A before we proceed with Module 2B. So let me give you an example. Sorry, 2B na pala to. Okay, let me open first 2A. There. Okay, let me give you an example. So in computing WACC, remember that cost of capital is cut into three items: cost of long-term debt, cost of preferred shares, and cost of common equity. Okay? So yun yung tatlong components ng cost of capital. When we say capital kasi, ito yung long-term financing natin ng company natin. And where do we get long-term financing? We get it from debt. Diba, pag nangungutang tayo, example nito yung mga long-term debt natin, bonds. And then, aside from that, yung equities natin, pag nag-issue tayo ng common shares or common stock. And then also, we also get funding from equity din, pero preferred equity naman. Okay? So yon. So in computing for the weighted average cost of capital, kaya sinabing weighted average kasi kukunin natin yung average ng tatlong cost of capital na yon. Bawat isang capital structure, which is debt, preferred shares, and common equity would have their own cost. Diba? Ano yung return na ini-expect ng debtors natin at return na ini-expect ng mga investors natin. So lahat yun may cost and we need to get the average, okay, based on their weights. That's why it's called weighted average cost of capital. Okay, so let me read the question or the problem. Company A has 4,000 6% coupon bonds that have 12 years left to maturity. The bonds are currently selling for 82% of a par value of 1,000 per bond. Company also has 12,000 shares of 4.5% preferred stock with a par value of 100. They are currently selling for 81.82. Additionally, Company A has 100,000 common shares outstanding, where the shares just paid a dividend of $4. The dividend growth is 4%, and the current stock price is 83.20. The stock has a beta of 1.25 when the risk-free rate is 4%, and the expected return on market portfolio is 8%. So requirement Roman numeral number 1 is compute the company A's weighted average cost of capital. So as I compute, so hopefully you have your pen and paper and calculators ready so that you'll be able to practice answering with me. Okay, so the first step that we need to determine, since we have bonds, we have preferred, and we have common shares, is to compute for their cost, for their respective costs. So the first thing that we will compute is, of course, determine the cost of debt. Okay, so determine the cost of debt. That's the first item. Okay, so we can actually, and remember, ito mga cost na to, this is expressed as percentage. Okay, so we could actually make use of Excel or financial calculator. Okay, and we can actually make use of yung rate. Okay, yung rate na function. Okay, but before that, let's put muna all the required inputs para ma-compute natin yung rate or yung cost of capital. So the first thing that you need to get is what is the future value of the bond. And when you say the future value of the bond, ito yung face value mo. Okay, so what's your face value? That's actually your par value at the end of the number of years na outstanding yung bonds. You will be paid 1,000 per bond. So this is your face value. So this will be your future value. Okay, so after 12 years, ibabalik sa'yo yung 1,000 mong par value. Okay, so yun. Pero right now, you also need to get what is your present value. Okay? Or your issue, yung issue issue price mo, di ba? So right now, what's your present value? Sabi dito, the bonds are currently selling for 82% of par. So that means we need to get 82% for us to get the present value. Okay, so this one times 82%. Okay, so far ba nakukuha? Okay, sige. And then, since nakuha mo na yung future value at present value, ngayon kunin mo naman yung interest expense mo, yung coupon na binabayaran mo every year. Okay, so anong ano dito? So coupon payments. What's your coupon payments here? That's 1,000 bond multiply mo by 6% o kung ano yung coupon rate niya. So every year, nagbabayad si company ng, sorry, dito na natin ilagay. Okay, every year, nagbabayad si company ng 1,000 times 6%. Okay, so on top of the of the so on top of the face value na babayaran mo at the end of 12 years, nagbabayad ka rin ng $60 every year. Yun yung interest expense mo, yung coupon payments mo. And then, ang pinaka-last na kailangan natin na input for us to get the rate is yung number of payments. Ilang beses ka magbabayad ng coupon payment mo. So sabi dito, you have 12 years left to maturity. So 12 times kang magbabayad ng coupon payment. So ito yung apat na inputs na kailangan natin for us to be able to get the cost of debt using Excel or financial calculator. Okay? So we can now compute for the cost of debt, or sometimes we call this yield to maturity. What's our YTM or yield to maturity rate? Okay? So kapag nagko-compute ka ng present value ng rate, kailangan yung future value mo future value mo should be positive and baliktad yung iyong present value. So kailangan negative to. Okay? Because one is outflow and the other one is inflow. So let's do the function already. So rate. And then N per, ano tong N per? Ito yung, okay, number of payments. Okay, so what's the number of payments? 12. Okay, and then, yung payment, so ano yung binabayaran mo for 12, for 12 years? $60. Okay, and then, what's your present value? That's 820. And then, for the future value, that's 1,000. Okay? So ito, pwede mo nang hindi fill upan tong type at yung guess na to. Okay, so the answer is 8.44%. So yan yung iyong cost of debt, yield to maturity, given the following inputs. Okay? So again, all you need to do is to get your future value, your present value, which is kung magkano siya binibenta ngayon. Actually, that's your market value also, di ba? And then yung interest payments mo, which is your coupon payments, which is, sabi dito, 6%, and you apply it with your face value. So 6% times 1,000, that's 60, and yung number of payments, kung ilan yung years left. Yeah. And you may now be able to compute for your cost of debt or yield to maturity using the function rate. Okay, so if you have questions, just feel free to to clarify so that we can discuss further. Now, paano naman ko for example sa board exam? Syempre sa board exam bawal ang Excel, bawal ang financial calculator, 'di ba? So medyo basic lang yung magiging basic calculator lang yung pwede doon. At may tanong sa inyo ng cost of debt, 'di ba? So we could actually make use of approximation method. So mag-approximate lang tayo, 'di ba? And we know naman, 'di ba, na when we compute for the cost of debt, it's just your interest expense over your average bond price. Okay, one moment. Okay, sige, let me share again my screen. So far ba nakukuha? Okay.
Yes, yes.
Okay, let's compute for the approximation method. Okay, so Your interest. So alam natin that when we compute for the percentage, di ba, what is your total interest expense divided by your average bond price? Yan yung pinaka-formula natin. Interest expense and your average bond price. So when we say interest expense, magkano interest expense mo? Siyempre, yung coupon payments mo. Yan yung interest mo, di ba? So, how do we compute for this? Again, it's 1,000 times 6%. Okay? So that's 1,000 times 6%. So ito yun, di ba? And then, napag-aralan natin sa financial accounting, di ba? And I don't know, I think sa financial management din ninyo. Kapag nag-issue ng bond, it would depend if it's at a discount or at a premium, di ba? Kapag binenta mo siya at a discount, ina-amortize mo yung discount and you add it to your interest expense. Pero kapag you bought it at a premium, mas mataas sa par, ina-amortize mo rin yung premium, pero kabaliktaran naman ng discount. Kasi yung na-compute mong amortization ng unearned premium mo, you will deduct it sa iyong interest. Okay? So again, pag you issue at a discount, it's an additional interest. Okay? Pero if it was issued or if it's currently at a premium, it's a deduction in your interest. So right now, it's currently selling at a discount kasi 82% of par value. Diba? So that means if it's at a discount, kailangan yung amortization mo doon ay mai-include or mag-a-add doon sa interest expense mo. Okay? So, interest on unearned discount. Or an amortized discount na lang. An amortized discount. Okay? And how do we compute for that? Siyempre, kukunin mo yung discount. It's currently at 1,000 and then i-minus mo yung iyong current, di ba? Current price, which is 1,000 minus 820, that's 200, and that's 180. Okay? That's 180. Pero the 180 na to, you have to amortize it over the 12-year period na left to maturity. Okay? So that's why you have to divide this by 12 years. Okay? So yun. So para makuha mo yung yearly amortization mo, so that's 1,000 minus 820 over 12. So that's $15. Okay? So that's $15. Isog-isog lang natin to konti para makita nyo yan. So you can now compute for your total annual interest expense. Okay, and your annual total interest expense is $75. So nakuha na natin interest expense. Now we get the average bond price, di ba? So what is the average bond price? At napag-aralan naman ninyo sa inyong financial management, di ba? When you compute for your average, that's beginning balance plus ending balance divided by 2. So what's your beginning balance? Your beginning balance is kung magkano yung presyo mo ngayon, 820, di ba? What's your ending balance? At the end of 12 years, babayaran ka ng face value na 1,000. Okay, so this is your present, this is your future. And then divided by 2. That's 820 plus 1,000 divided by 2. So 910. Okay. So you can now compute for your cost of debt or yield to maturity. So, 75 divided by 910. So, 8.24% yung lumabas. Okay? So, ito, 50-50 yung weight ng present tsaka ng future value. Kasi ang turo kasi sa atin, to get the average, kailangan beginning plus ending divided by 2. So kaya 8.24% siya. So medyo malayo siya doon sa totoong answer na 8.44%. So kapag in-answer mo to, 8.24% at wala doon sa choices, okay, we will use another approximation model which is 60-40. Okay? Bakit 60-40? Kasi we will be putting more weight sa 820 at medyo less yung weight doon sa future value na 1,000. Bakit? Kasi alam naman natin, di ba, kapag nag-amortize tayo ng isang bonds, diminishing yung effect nun. So hindi naman agad, hindi naman straight line yung pag-increase ng bond price mo, yung pag-amortize, di ba? Diminishing siya. Karamihan ng payments mo ay ina-apply mo muna sa interest bago sa principal. Diba? That's why medyo mabagal yung pag-move ng bond price mo at the start, and then later on na lang bumibilis towards the end of the term. That's why we will be putting more weight or 60% weight dito sa 820 kasi medyo mabagal pa yung pag-usad niya, and then less weight dito sa 1,000. Okay? So if we do the same for interest expense and we apply this new weight of 820 times 60% plus 1,000 times 40%. So that's 892. And then we now compute for your cost of debt. That's 8.41%. Okay? So yon. So medyo mas malapit na siya dito sa 8.44%. So sa talaga sa mga CPA review, talagang 60-40 talaga yung ginagamit natin. Okay? Pero may mga ibang text, may mga ibang author na ginagamit is 50-50, which is 820 beginning balance plus ending balance divided by 2. Okay? So that's how we determine cost of debt. Ayun. Through Excel, mas mas sakto to, pero sa board exams, approximation method ang ginagamit natin, which is interest expense over average bond price. Okay? And mas madalas ginagamit yung 60-40 weight in determining the average bond price. Okay, so after we were able to get cost of debt, we should now be able to determine naman your cost of preferred equity. Okay? At alam natin ng preferred equity, ang kaibahan niya sa common equity is that ito yung nauuna pagdating sa dividends. Diba? Mag-i-issue ka muna ng dividends sa preferred mo, and then kung ano yung matira, yun ang ibibigay natin sa common shares natin. So, ganun pa rin yung principle natin, di ba? Interest expense over your average asset size, di ba? Pero ang interest na counterpart ng preferred equity, hindi interest, which is dividends, di ba? So the way that we compute for this, of preferred stocks. Okay, so sometimes we express it as KPS. Lang natin, liitan lang natin, i-subscript lang natin PS. Okay, so that's preferred dividend per share. So that's your cost or your interest, pero let's call it a cost. Okay, over your your average asset, your average balance sheet. That's your current price per share. Okay, in a way, hindi na natin siya i-average. Okay, so yon, your cost over your price. Okay, similar lang dito sa approximation method natin sa cost of debt. Okay, so in this problem, asan yon, di ba? Sabi dito, company also has 12,000 shares of 4.5% preferred stock with par value of 100. They are currently selling for 81.82. Ayan, so madali lang to, di ba? Because your preferred share is just 100 par value times 4.5%, which is 4.5 dividend per share. And divided by the price, that's 82, 81, 82. 81, 82. Okay. So when we compute for this, times 4.5% over 81.82, that will give you a 5.5% cost of preferred stocks. Okay? So ganun lang siya kadali. Okay. So nakuha natin yung cost of debt, nakuha natin yung cost of preferred equity. Let's now compute for the cost of equity or common equity. Okay? So the third step is determine the cost of common equity. Okay, so there are two methods of estimating cost of common equity. Okay, napag-aralan natin yan sa financial management. So, the way that we compute for the cost of common equity, the first method is what we call the dividend growth model. Okay? So, ano itong dividend growth model? Ito yung model na ginawa ni Myron Gordon. Okay? And then we call this the Gordon model. Okay. So parang ano rin to, parang cost over price. Okay? So ano yung cost pagdating sa equities, 'di ba? Dividends. Pero ang difference dito, kino-consider natin yung growth ng dividends. Kasi syempre ang assumption natin, kumikita at lumalaki yung company, so over time, dapat tumataas yung dividends mo. And we should put that into account in computing for the cost of common equity. Whereas, dito sa preferred stocks, di ba, fixed na to eh. Pag sinabing 4.5% preferred stock, kahit kumita ng sobra yung company, naka-fix pa rin siya sa 4.5%. So, walang growth na kinoconsider dito. Ganun din sa cost of debt, di ba? Walang growth na kinoconsider dyan kasi fixed kung ano yung nasa contract natin. Pero dito sa common equity, yung dividends, most likely mag-i-increase dyan, lalo na kapag kumikita yung company. That's why the formula here is also cost over your base or your share, pero ipa-plus natin yung growth rate. Okay, so what's your future dividend? Ito yung cost mo over net current price. Okay? So yan yung usual natin, cost over base, di ba? Pero kapag na-compute mo yan, i-add mo yung growth rate. Okay. So we have to consider na dapat future dividend ha. Yun yung yun yung dividend mo na ipipay mo next year or after 1 year of operations. Hindi yung kaka-declare mo pa lang. Okay? Hindi yung present or yung current dividend mo. Yung future dividend mo, yung D1 mo, yung dividend mo after 1 year. Okay? So how do we compute for your future dividend? Siyempre, your current dividend plus your growth rate. Diba? At anong sabi dito? Company A has 100,000 common shares outstanding where the shares just paid a dividend of 4. So ito yung current mo, kakabayad lang niya. Ang gusto natin yung future dividend eh. The dividend growth is 4% and the current stock price is 83.20. Okay, so for us to compute for the future dividend, that's your current dividend of 4 times 1.04 so that we take into account the dividend growth of 4%. Okay, so that's the formula for future dividend. Now we divide this with the current net price, which is at 83.20. 83.20. Okay? And then, kapag nakuha na natin, i-add ngayon natin yung growth rate. Ano yung growth rate? 4%. So, dalawang beses natin ginamit yung yung growth rate to compute for the future dividend at saka to complete yung formula ng Gordon model. So, what's now the cost of equity or common equity? That's 4 times 1.04 divided by 83.2. So yan yung usual formula natin na cost over base. Pero i-add natin yung ating growth rate na 4%. That gives you 9%. Okay, so that's the first model in computing for the cost of common equity. Sometimes this is KE. Okay, KE. KE. Okay. There's another model kasi etong model na to assuming na may dividends yung common shares, di ba? Pero alam naman natin na hindi naman lahat ng company nagbibigay ng dividends, di ba? Most of yung mga iba doon, they retain their income at they don't pay out dividends because they would want to increase the value of the stocks. Kasi syempre, every time na naglalabas tayo ng dividends, lumiliit yung retained earnings natin. Lumiliit yung value ng stocks natin. Di ba? Eh, paano naman yung sa mga the reason why they would want to invest is not because of dividends but because of capital gains. So, kung walang dividends, ang gamitin natin is CAPM or Capital Asset Pricing Method. Ayan, naturo din yan, di ba? Yung CAPM. Okay. Kasi, i-consider dito yung growth in the market at yung sensitivity ng stocks mo relative to the market. Okay, so how do we compute for this? It's your risk-free rate. Okay. Sorry. Risk-free rate or RFR plus your market rate premium. Okay. Bakit ganito yung formula niya? Okay, because at the minimum, ang ine-expect ng mga investors mo, sana kumita naman siya ng mas mataas doon sa safe investments like yung mga bonds, yung mga treasury bills, di ba? So risk-free, yun yung mga risk-free rate. Pero the reason why I'm investing in a stock, it's because I would want to earn more than the risk-free rate. That's why I would want to take some risk, market risk premium. I would want to take some risk, okay? And ano yung risk na yon? Yun yung market risk premium. Kailangan dagdagan mo ng return na ine-expect ko as investor doon sa risk-free rate. Kasi kung zero lang naman yung magiging return sa market or sa stocks at same lang siya doon sa risk-free rate, might as well just invest doon sa treasury bills, di ba? Kasi at least doon makakatulog ako na mahimbing at alam kong hindi magde-deteriorate yung value ng stocks ko. Okay? That's why ang formula niya is that on top of your risk-free rate, magkano yung premium na gusto i-earn ng isang investor. So, for us, so yung risk-free rate, madali na naman siya ma-compute, di ba? Kasi normally, binibigay na yan. Okay? So sasabihin niya, your risk-free rate is 4%. Pero minsan, hindi niya sasabihin niya, the rate or the current rate of long-term treasury bonds is 4%. So i-assume mo, yung treasury bonds na yon, yun yung magiging risk-free rate mo. Okay? So ito, binibigay yung risk-free rate. Pero paano mo ngayon kino-compute yung market risk premium? Okay? So when you compute for your market risk premium, you need to get your beta coefficient, which is a measure of how sensitive your stock is relative to the movement in the market. And then multiply mo by the premium or the market or the difference between yung growth mo sa yung growth sa market at saka yung sa risk-free rate. So times market return minus risk-free rate. Okay? Okay. Again, yung market risk premium, ang formula niya is beta coefficient times market return minus risk-free rate. Kumaga, ito yung premium mo eh. Diba? On top of your risk-free rate, magkano yung additional? Okay? Which is, like for example, ang kinikita ngayon ng treasury bonds ay 4%. Pero ang stock market ay nag-increase ng 8%. So that means, ang premium mo is 4%, computed as 8% minus RFR. Okay? Pero, hindi mo naman ina-expect na mag-grow din ng similar ng 8% or ng 4% yung yung stocks, di ba? Kasi depende yan sa sensitivity mo. Okay? How sensitive is your stock versus dun sa movement sa stock market. At yun yung minimeasure ng beta coefficient. Kapag ang beta coefficient mo ay 1, ibig sabihin, kapag tumaas yung stocks mo, kapag tumaas yung overall market, yung stock market by 8%, tataas ka rin ng 8%. Pero kung ang iyong beta coefficient is 0.5, that means kalahati lang yung tinataas niya. Pag tumaas yung market by 8%, 4% lang yung increase mo. Okay? At ganun din, kapag bumaba yung market mo ng 8%, bababa yung iyong stock price by 4%. Diba? Kalahati lang. So, ibig sabihin, less than 1 na beta coefficient means na less sensitive yung stock mo. Okay? Less risky yung stock mo versus the market. Pero kapag ang beta coefficient mo is 2, okay? Doble yung nagiging effect or doble yung sensitivity mo doon sa movement mo sa market. So yun yung sinasabi ng beta coefficient. Okay? So let's now try to compute for your cost of common equity using the capping method. Okay? So that's 4% risk-free rate plus your beta coefficient of 1.25, that's your sensitivity, your measure of risk and volatility in the market, times yung premium mo, which is your market return na expected, that's 8%, minus yung risk-free rate mo, 4%. That's 4% plus 1.25 times 8% minus 4%. And that will give you 9% also na cost of common equity. Okay. So minsan, ang binibigay lang sa'yo is yung given na pang dividends. So gagamitin mo Gordon model. Minsan, walang binibigay sa'yo yung dividends, pero ang binibigay sa'yo yung given na pang CAPM or Capital Asset Pricing Method. Ang gagamitin mo is CAPM. Okay? So yun. At hindi naman palagi na dapat dalawa yung computin mo. Kahit isa lang. Okay? Kasi hindi naman lahat ay pang capital gains. Hindi naman lahat ay pang dividend stock. So yun. May question on this? So we were able to compute for your cost of debt. We were able to compute for your cost of preferred equity. And we were able to compute for your cost of common equity. Diba? So para ma-compute mo yung weighted average cost of capital, kailangan mo pagsama-samahin to. Pero kailangan makuha mo muna yung weights nila. Gaano ba kabigat itong mga sources of funding mo, itong capital structure mo sa debt, preferred equity, tsaka common equity doon sa balance sheet mo. Diba? So that's why the fourth step, 4, 5, 6 step is for you to compute, okay, the market value of each long-term financing. So determine the market value of debt, and then later on preferred stock, then later on common equity. Okay? So for us to be able to compute for the market value of debt, simple lang siya, di ba? What's your number of bonds outstanding times yung current bond price mo. So in the given above, sorry, baba na natin to para makita natin. In the given above, Company A has 4,000 bonds. So that means 4,000 yung bonds mo times magkano yung current bond price niya? Yun yung 820, yung 82% of par value. So that's 820. Your answer here is 4,000 times 820. Siyempre, habang gumagalaw yung ano mo, yung current price mo, gumagalaw din yung market value mo ng debt. Although yung book value mo is still maintained at face value. Okay? Less discount. Okay, so let's now compute for the market value of your preferred stock. Okay? Or your preferred equity. So market value of preferred equity. And how do we compute for this? Ganun din. Number of preferred shares outstanding times your current preferred stock price. Sabi sa problem, company also has 12,000 shares, diba? And it's currently selling for 82, 81, 82. So that's 12,000 shares times 81. So your market value for your preferred stock is at 981,840. And then last, you need to determine the market value of your common stock. And ganun din, number of common shares outstanding times your current common stock price. For in the problem, we have 100,000 shares multiplied by your current stock price of 83.20. That's 100,000 times 83. Okay. Ayan, so na-compute na natin yung weights or market value ng bawat isang financing natin. Na-compute na natin yung cost. So it's now time for us to compute for your WACC. So number 7, seventh step or step 7 is to calculate the WACC. Okay. And we know that the weighted average cost of capital or WACC, the formula there is your weighted after-tax cost of debt, which is KD. Natin. Okay. Plus your weighted cost of preferred stock, or KPS. And plus weighted cost of equity, which is your KE. All right. So, lista natin ha. Yung after-tax cost of debt, cost of preferred equity, and cost of common equity. Okay, so lista natin lahat ng mga market values na na-compute natin. Okay, compute natin lahat ng mga market values na na-compute natin. So for debt, we have 3.28 million. For preferred stock, we have 981,840. And for common stock, we have 8.32 million. So when we compute for your enterprise value, ayan ha, ang tawag sa total market capitalization mo of all your financing is your enterprise value. That's 12.581,840. Then we can now compute for your weights, which is this one divided by this. Your market value divided by your enterprise value. Your market value divided by your enterprise value. And when you sum up everything, that should be 100%. So you are heavily weighted sa common equity mo. That's why kailangan mas skewed dito yung ating weighted average cost of capital. So our cost of capital, okay, lista natin, ano na-compute natin? So assuming ha na wala tayong financial Excel, di ba? Ano lang tayo, pang board exam lang. So 8.41. And then yung preferred equity mo, it's 5.5. And then yung iyong common equity, either, so assuming CAPE mga kunin natin, 9%. Okay. So when we compute for your WACC, we just have to multiply your cost of capital per item or per component times the weight. For a preferred equity, that's 5.5% times 7.8% weight, and so on. And then we add this because weighted after tax. Okay, sorry. Ano pala? Itong after tax cost of debt, kailangan kasi kinompute natin dito gross of tax. Okay, so kailangan alisan natin siya ng tax shield. Okay, alisan natin siya ng tax shield. So times 1 minus the tax rate. na walang tax rate dito. Pero dapat may tax rate siya. Okay? So assume tayo na ang tax rate niya ay 30%, ha? Edit ko na lang yung problem kasi ako lang gumawa ng problem na to. Okay, dapat may tax rate siya. Okay, so 30%. So 5.89%. So, lagyan natin dito, tax rate is 30%. Okay. So bakit natin ina-after tax to? Samantalang yung cost of preferred tsaka cost of common equity, hindi siya ina-after tax. Okay? Because itong interest expense ng cost of debt, this is tax deductible. Kasi this is a real expense. This is a real cost, di ba, sa balance sheet natin. Samantalang yung mga dividends na binabayaran natin sa preferred at saka yung dividends na binabayaran natin sa common equity, hindi naman siya tax deductible, di ba? It's like a reduction in our capital and not a reduction in, okay, one moment. A reduction in our capital and not in the in the balance, sorry, and not a income statement. Okay? So yon. So that's the reason why ina-after tax natin siya. Okay, so again ha, ang ina-after tax lang natin is cost of debt. Ayun. Kalimutan ko lang lagyan ng tax rate. So assuming 30% tax rate. So we add everything up. So your WACC is now 7.91%. Okay? So do you have questions in computing for the WACC? So 7 steps. Compute for the cost of debt. It could be using your Excel or financial calculator, but for board exams, we use approximation method with a 60-40 weight for your average bond price. Okay? And then step number 2, compute for cost of preferred equity. Still cost divided by price, di ba? And yung cost mo dito is your dividends. Your common cost of common equity or your KE is actually can be done in 2 methods. The dividend growth model kung dividend paying yung stock or CAPM kung hindi naman dividend paying yung stock. Okay? Na nag-rely lang sa capital gains. And then after you compute for your cost of common equity, you should be able to get your weights. And for you to be able to get your weights, you need to compute for your market value of debt, market value of preferred stock, and market value of your common stock. So kapag nakuha mo na yung 6 na components na yon, pwede mo na siyang ilatag so that you'll be able to compute for the weights. And then yung cost of capital mo, ilalatag mo rin siya. Pero remember that the cost of debt should be after tax because among all the costs, ito lang ang tax deductible. May tax shield ka dito. Meanwhile, ang dividends as cost, hindi siya tax deductible. Kaya hindi siya after tax. And then you'll be able to compute for your weighted average cost of capital. Do you have questions?
Wala po, sir.
Alright. Okay, sige. So let's go now to the second item. Compute the company A's marginal cost of capital. O yan, may concept ulit. Itong, aside sa weighted average cost of capital, may tinatawag tayong marginal cost of capital. Ano itong marginal cost of capital? Ito yung cost of capital mo for additional financing. Diba? Kapag magpa-finance ka ng panibago, ano yung marginal? Pag sabing marginal, yung karagdagan. Diba? Or yung difference, your marginal cost of capital. If it has an opportunity to invest in an attractive project that costs $1 million. Consider that company A has 500,000 in retained earnings being generated this year. So that means may makukuha na siyang 500,000 as kita na pwede niyang gamitin to finance this project, di ba? All additional equity financing must come in the form of new common stock 50% and preferred stock 50%, and the company must pay flotation cost of 5% of the market price. So anong sinasabi nito? So since kulang pa Kasi 500,000 lang naman yung retained earnings mo, di ba, na pwede mo ipang-finance dito. Yung difference nun, yung additional financing na kailangan natin will be in the form of common stock and preferred stock. Pero, meron kang tinatawag na flotation cost. Ano tong flotation cost? Yung flotation cost na to, ito yung cost mo for issuing another common stock or preferred stock. Diba? Na kailangan natin i-consider sa computation ng cost of capital natin. Okay? Sige. So, to compute for your marginal cost of capital, ganun pa rin, pero we're only computing for your for the 1 million. We're not anymore computing for the entire weighted average cost of capital ng company. Kung baga tinatanong lang dito, kapag nag-invest ba ako ng 1 million sa isang project, magkano yung magiging cost of capital ko for that 1 million? At ang tawag mo doon, marginal cost of capital. Your cost of capital on the additional financing. Okay? Sorry. Okay. So, item number or Roman numeral number 2, marginal cost of capital. Okay. So, we need to compute your two new costs. Okay? Ano yung two new cost mo? 'Di ba? Kasi meron ka ng existing cost which is 500,000, 'di ba? So, ano yung two new cost mo? Yung common stock at saka yung preferred stock mo. Kasi may flotation cost yon. So, cost of new ordinary shares sorry. Or sometimes you call this as KN. This is your common shares, okay? Yung common shares. Okay, so how do we compute for this? Ganun pa rin. What's your future dividend? So cost over base plus growth rate, di ba? So your future dividend over your base, ano yung base mo? Your net issue price. Okay? Which should consider your flotation cost of 5% plus growth rate. Okay? So yun. How do we compute for your cost of new common shares? That's $4 times 1.04, which is ito, di ba? You just paid $4 and then mag-i-increase siya ng 4%. Per your net issue price, magkano yung magiging price mo sa pag-i-issue? Ang current stock price mo is 83.20. Ayan. 83.20. And then, pero you have to deduct it with your flotation cost. Okay? So, times 95%. Yan. Sometimes yung flotation cost, binibigay siya as an amount. Diba? For example, amount of flotation cost is $5. So, gagawin mo dyan, 83.2 minus $5. Sometimes percentage, just like in this problem. So, this is your usual cost of capital. Pero, since we're computing for the Gordon model plus your growth rate of 4%. Okay. That's 4 times 1.04 over 83.2 times 95% plus 4%. And that gives you 9.26% cost of new ordinary shares or new common shares. Okay? Nagets nyo ba? So same lang yung formula ng Gordon model. Ang naiba lang dito, since may flotation cost, you need to deduct yung flotation cost doon sa issue price. Doon sa denominator. Okay? And then, we need to compute for your cost of new preferred shares. Or your KPS. Okay. So, ganoon pa rin. Anong formula nun? Preferred dividend per share divided by net issue price. Okay. So, ang sabi dito, $100 par 4.5% preferred. 100 times 4.5% divided by your net issue price. Magkano ang current price niya ngayon? 81.82. So pag nagbenta ka ngayon, yan ang presyuhan pa rin, di ba? 81.82 times 95%. Okay, because net issue price, kailangan i-minus natin yung flotation cost. Ganito, ano to flotation cost? Ito yung administration cost natin, underwriting cost natin, issuance cost natin for us to be able to issue itong bagong shares natin. So that would be 100 times 4.5% over 81.82 times 95%. Okay, so that's 5.79% cost of new preferred shares. Okay, so since meron na tayo ngayong mga cost of new ordinary shares and new preferred shares, latag na ngayon natin. Okay? So similar lang kung paano natin kino-compute yung marginal cost with the weighted average cost of capital. Okay, kaya lang ang perspective nito is on the additional funding lang of 1 million, not on the entire company. Okay, so listan natin. Cost of retained earnings. You also have cost of common shares. You also have cost of preferred equity. What's your market value as of the moment, di ba? Gagamit ka ng 500,000. Gagamit na retained earnings. Gagamit ka rin ng common shares na 250,000. And how do we compute for the 250,000? Yung 500,000 mo natitira times 50%. Ito yun. And then, for preferred naman, yung 500,000 mo natitira times 50% din. Your total value or enterprise value is 1 million. But you can't call it anymore enterprise value because it's not anymore the value of the entire enterprise. Kumbaga ito lang is yung project value. Ayan, lagyan natin project value. And then we can now compute for the weights. Okay, so this divided by your project value. This divided by your project value. So that when you add everything up, it's 100%. Okay, lagyan natin yung cost of capital. Okay? So ito na-compute natin, new ordinary shares, dito yan sa common shares. Okay? Your preferred equity, ito yan, 5.79%. Diba? So itong retained earnings mo, kukunin mo kung ano yung original cost of common equity mo. Okay? Na 9%. Bakit sir yun ang kukunin natin? Hindi yung hindi itong bago na compute natin. Kasi ito, may consideration ka na may flotation cost ka dito. Okay? Yun kasi walang consideration ng flotation cost. Magkapareho lang actually siya ng ng formula. Kaya lang ito, walang flotation cost. Ito may flotation cost. Remember, ang retained earnings mo, hindi mo naman siya ini-issue. So that's why wala kang flotation cost dyan. Ang ini-issue mo is yung new ordinary shares mo, na common shares, at saka yung preferred equity. That's why you have to consider the flotation cost here. Okay, so let's get now your weighted average cost of capital, okay, or your MCC, sorry, your marginal cost of capital. By multiplying your weight versus your cost of capital, and add everything up, so that means your cost of capital is 8.26%. So right now, kapag i-value mo, okay, pag i-value mo yung iyong company, or kapag i-measure mo yung performance ng isang company using EVA, your WACC is 7.91%. Pero kung i-determine mo naman whether you would accept a project in your capital budgeting, di ba? Ang gagamitin mo is yung marginal cost of capital. Will you accept this 1 million? So, gagawa ka syempre ng capital budgeting mo, and then, gagamitin mong discount rate is the marginal cost of capital, not this weighted average cost of capital, because this pertains to the entire company, while this pertains only to this project costing $1 million. Okay, so that is actually the lesson for the cost of capital, which we actually use in computing for our EVA. And I hope I was able to strengthen your learning in your financial management. I know this was already discussed in your financial management. And some are also discussed in your financial accounting, specifically how we compute for the cost of debt. Di ba? Yung pag-amortize ng discount, tsaka ng premium, and yon. And I do hope that this was able, or this discussion was able to strengthen your learnings in your financial management and in your financial account. So with that, okay, if you don't have any question, let me now go to the other portion of the discussion, which is, so we're done with decentralization, we're done with segment reporting analysis, we're done with ROI, residual income, and EVA. We're done with the computation of weighted average cost of capital. Let's go now to transfer pricing. Okay? So ano ba itong transfer pricing na to? Itong transfer pricing na to, ito yung internal pricing na ginagawa ng bawat profit center at saka investment center. Hindi naman kasi ibig sabihin na magka-department kayo, hindi ka na kayo pwede mag-transact with each other. Diba? So, possible na magta-transact kayo with each other for the benefit of the entire company, and also it will also be beneficial for for each other's division, diba? Or each other's responsibility center. So yon. So again, pag sinabing transfer pricing, ito yung price na siniset mo, okay? Para ibenta yung goods or services mo to the other responsibility centers within the company. So in Module 4, we'll be discussing how to do pricing, but that is in the perspective of pricing in the outside market, sa customer mo, outside of the out of the company. Pero since we are talking about performance measurement here, strategic performance measurement, to be exact, di ba? We need to be able to understand how these responsibility centers interact with each other. And one of the things that they discuss or they negotiate is yung pricing internally. And that's what you call basic transfer pricing. Diba? And there are different methods or schemes or alternatives for us to be able to do transfer pricing. One is cost-based, the other is market-based, and the other one is negotiated transfer price. Okay? Yung cost-based, ito yung transfer price na normally na siniset ng selling division. Meanwhile, yung market-based, ito yung transfer price or presyo na siniset ng buying division. And then kapag pinagsama mo yung cost-based at market-based, that's what you call negotiated transfer price or sometimes called hybrid transfer price. Okay? Kaya Noreen at saka kay Garrison, they call it negotiated transfer price. Kaya Horngren naman, they call it hybrid transfer price. Okay, let's have some formulas here. So how do we compute for a transfer price? First is your cost-based transfer price. Okay, abbreviate ko na lang ha. TP. Okay, so this cost-based transfer price is normally your minimum transfer price set by the selling division. Kung sino yung nagbebenta. Okay? For example, merong Division 1 at saka Division 2. Ang nagbebenta is Division 1, siya yung selling division. Sa Division 2, siya yung bumibili, siya yung buying division. So, sino ang gumagawa ng cost-based? Yung selling division. Okay, and how do we compute for this? It's variable cost plus opportunity cost minus avoidable cost. Okay? Again, variable cost plus opportunity cost minus avoidable cost. So how do we compute for the opportunity cost? Kasi variable cost given yan, avoidable cost given din yan. Pero opportunity cost, hindi yan given, kino-compute yan. So ano yung sinasabi nito? Ano yung contribution margin lost mo? Okay? If in case that you need to sacrifice some units just to accommodate yung other division within the company. Kasi may mga times na pag nagbebenta ka sa ibang division, wala ka namang malulose na regular sales eh. Wala kang masasacrifice. So that means variable cost lang yung magiging basis mo. Tapos minus avoidable cost kung meron, di ba? Pero kung may mga times na full capacity ka na at gusto nang bumili ng kabilang division within the company sa'yo, at para ma-accommodate mo siya, kailangan mo mag-sacrifice ng sales outside. So, kailangan mong ilagay yung opportunity cost doon sa iyong pricing, di ba? Kasi syempre, maglo-lose ka ng revenues, ng contribution margin sa labas, di ba? So, kailangan i-cover yon ng kabilang division na gustong bumili sa'yo. Okay? So, yon. So, how do we compute for contribution margin? For opportunity cost, contribution margin lost. Okay? And the way that we compute for contribution margin lost is yung selling price mo minus variable cost. This is your contribution margin, di ba? Per unit. And then, multiply mo. Multiply mo with the number of units na masasacrifice mo. Para sacrifice. Para sacrifice. Kuha mo yung total. Okay? Yung total contribution margin lost mo. And then, paghahati-hatian siya ngayon ng number of units na kailangan mong i-transfer. Okay? So that's the formula. Selling price minus variable cost. That's your contribution margin per unit times the number of units na isa-sacrifice mo. So that's your total contribution margin lost divided by ilan ba yung bibilhin o yung ita-transfer natin sa kabilang division. Okay? Ano itong avoidable cost? Ito, normally given yan, pero yung avoidable cost, yung nature niyan, yung mga marketing, yung mga commission, na dati kapag binibenta natin sa labas, since internal na siya, hindi na natin kailangan magbayad. Diba? So, we will reduce that or we will deduct that in our cost-based transfer price. Okay. How about yung market-based transfer price? Okay. Ito naman yung maximum transfer price set by the buying division. Okay? Okay, bakit maximum transfer price na siniset ng buying division? Remember yung presyo, okay, na isiset na na transfer price, pag ikaw yung buying division, cost yun sa iyo. That's why ikaw yung magsiset ng cap, ikaw yung magsiset ng upper limit, ikaw yung magsiset ng maximum transfer price. Samantalang, yung selling division, ikaw yung nagbebenta, okay? Pero, ang transfer price mo, kung cost yon sa buying division, selling division, yung transfer price mo, yun yung kita mo, yun yung revenues mo, di ba? At ayaw mo na yung revenues mo would be lower than your cost. That's why ikaw ang magsiset as a selling division, ikaw ang magsiset ng minimum transfer price. So yon. So dito naman sa market-based transfer price, madali lang naman yung computation dito. All you have to get is all you have to do is to get the net purchase price of the outside market. Okay. Ano yung alternative mo? As a buying division, magkano ko ba nabibili tong same product na to sa labas? Okay? Kasi kung nabibili ko na to, itong same product na to sa labas, hindi na ako, ito na yung maximum na pwede kong ipeg doon sa transaction namin. Kasi kung mas mataas yung i-charge ng sister division ko kaysa doon sa outside market, hindi na ako bibili sa sister division ko. Bibili na lang ako doon sa outside market. So ang maximum transfer price na isa-set ng buying division is based sa market, magkano niya nabibili sa labas. What's the net purchase price of the outside market? Okay? Sige. So let's try to apply this by answering a problem in the book. Okay? So we're now. So our main reference for this module is Noreen and Garrison, chapter 11. So let's make use of this Noreen and Garrison, chapter 11. Okay, so page 505. Okay, sige. So alpha and beta, so we'll answer problem 11-4, basic transfer pricing, page 505. Alpha and beta are divisions within the same company. The managers of both divisions are evaluated based on their own division's return on investment. Assume the following information relative to the two divisions. Okay? So, meron kang alpha, we have capacity in units, number of units now being sold to outside customers, you have your selling price, you have your variable cost, and you have your fixed cost. Okay? Pagdating sa transfer pricing, we don't normally consider fixed cost. So normally ito, ini-ignore na natin talaga siya automatically. Okay, unless avoidable cost yan. Pero on a normal basis, ang fixed cost, hindi natin siya kino-consider. Ang beta division naman, ang given sa kanya, number of units needed annually. So ilan yung kailangan, gusto niyang bilhin. Yung purchase price niya now being paid to an outside supplier. So magkano niya binibili sa labas yung kailangan niya annually. So lumalabas dito, ang buying division mo is alpha. Your selling division is alpha. Your buying division is beta. Okay? So you have different cases here. Let's try to answer. Number one, managers are free to decide if they will participate in any internal transfer. Okay? All transfer prices are negotiated. Number one, refer to case number one shown above. Ayan. Alpha division can avoid $2 per unit in commissions on any sales to beta division. Will the managers agree to a transfer? If so, within what range will the transfer price be? So tanong dito, with this given, tingin mo mag-agree yung alpha division at beta division to have a transfer internally? Yes or no? At para malaman natin, kailangan magkaroon siya ng acceptable transfer price range. Kailangan yung minimum transfer price mo, which is cost-based, at saka yung maximum transfer price mo, which is market-based, kailangan acceptable yung range niya. Mas mababa yung minimum at mas mataas yung maximum. Kapag mas mataas yung maximum, mas mataas yung minimum versus sa maximum, so that means hindi sila pwede mag-agree. Okay? So, walang agreement na mangyayari. Okay, sige. So, let's try to answer. Ito yan, nilagay ko na dito. Okay? So this is actually negotiated transfer price range. Okay? Kasi when you say negotiate transfer price rate, kailangan mag-set si selling division ng transfer price based on cost at mag-set ng maximum transfer price si buying division based on market. So what is the minimum transfer price? Okay? So again, ang minimum transfer price, sino ang nagsiset? Ang nagsiset ay si selling division, si alpha. And what's our formula here? That's variable cost plus opportunity cost minus avoidable cost. Okay. Okay. So what's the variable cost here? The variable cost is $18. Okay. So at the minimum, yan yung kanyang dapat i-charge. Pero ang tanong dito, may opportunity cost ka ba? Para malaman mo kung may opportunity cost ka or wala, tatanong mo, ang capacity mo ba full na? What's your current capacity? Meron ka pa ba bang excess capacity? Kasi kung may excess capacity ka pa at you can accommodate this 5,000 units, zero yung magiging opportunity cost mo. Pero kung full capacity ka na, that means you need to sacrifice, okay? Sacrifice some regular sales outside for you to be able to accommodate yung request ni Beta Division. Okay. So ilan yung capacity niya? 80,000. At currently, ilan na yung nabebenta niya sa outside customers? 80,000 din. So that means full na yung capacity. Okay? So, since full na yung capacity, kailangan niya mag-sacrifice ng 5,000 para ma-accommodate niya si Beta Division. So, what's our formula for the opportunity cost? What's your selling price? Your selling price is 30. What's your variable cost? It's 18. So, this is actually your contribution margin. Diba? Times the number of units to be sacrificed, that's 5,000. Okay. And then, all over, the number of units to be transferred, that's also 5,000. Okay. So, similar lang, kung magkano yung sasacrifice mo, since full capacity ka, yun din yung bibilihin mo. Pero may mga instances na ang sasacrifice mo lang, for example, 2,000. Okay? Kasi for example, ang capacity mo 80,000, pero ang iyong current sales outside is 77,000. So that means may excess capacity ka pa 3,000. So ilan na lang yung kailangan mo i-sacrifice? 2,000 na lang. So times 2,000 divided by 5,000. So ganun yun ha. Nagkataon lang na yung buong, na full capacity ka at yung buong 5,000, kailangan mo i-sacrifice para ma-accommodate mo si Beta Division. Okay, so that's your opportunity cost. And then minus avoidable cost. What's your avoidable cost? Your avoidable cost is $2 per unit. Okay, let's now compute. That's 18 plus 30 minus 18 times 5,000 over 5,000 minus 2. And you are given $28. Okay, and this is your cost base. Let's now compute for the maximum transfer price. And we know that the maximum transfer price is based on market. So market-based dyan. Okay. And the market base is just your net purchase price being paid to outside supplier. In this case, 27. Okay. So your minimum transfer price is 28, your maximum transfer price is 27. So ibig sabihin, wala kang acceptable transfer price kasi wala ka namang range na 28 to 27. Diba? So the answer is, to your question, to the question, will the managers agree to a transfer price? And if so, within what range will the transfer price be? The answer is no, they will not agree because there is no price. Okay, so that's number one. Let's go now to number two. Refer to case number 2 shown above. A study indicates that Alpha Division can avoid $5 per unit in shipping costs on any sales to Beta Division. Letter A. Would you expect any disagreement between the two divisional managers over what the transfer price should be? Explain. So para malaman mo kung mag-agree sila or magdi-disagree, kailangan computean mo muna magkano ba yung minimum at saka yung maximum transfer price. Number 2, letter A, negotiated transfer price range pa rin. Okay? So, what's the minimum transfer price, which is again cost-based? That's variable cost plus opportunity cost minus avoidable cost. Okay, so what's the variable cost here? Case number 2, $65. Plus, may opportunity cost ba? Gusto niyang bumili ng 30,000. May capacity ba or wala? Wala. Actually, walang-wala. So that means para ma-accommodate niya itong 30,000, kailangan niya mag-sacrifice ng 30,000 din. So, for us to be able to compute your selling price of 90 minus your variable cost of 65, so that's your contribution margin per unit, multiplied by the number of units to be sacrificed. So in this case, 30,000 then. Okay, and then divided by the number of units to be transferred. So 30,000. Okay. And then saka natin i-minus yung avoidable cost of $5. 65 plus 90 minus 65 times 30,000 divided by 30,000 minus 5. So your minimum transfer price is 85. Okay, and again, this is your cost base. All right, let's now compute for your maximum transfer price. Okay, your maximum transfer price is market-based. And this is just the net purchase price now being paid to an outside supplier. Okay, and how much is that? That's 89. Pero since net purchase price, wala namang discount. Okay, so okay lang yan. So 89. Okay, so is there an acceptable transfer price? Yes, there's an acceptable transfer price kasi yung minimum mo mas mababa sa maximum. Kumbaga, ang transfer price mo can be any price in between 85 to 89. So, to answer the question, would you expect any disagreement between the two divisional managers over what the transfer price should be? The answer is no, there's no disagreement. Kasi mag-agree sila eh, di ba? There will be no disagreement since there is an acceptable transfer price. Okay, let's go to letter B. Assume that Alpha Division offers to sell 30,000 units to Beta Division for $88 per unit. And that Beta Division refuses this price. Remember ha, may acceptable transfer price na 85 to 89. At ang sabi, o sige, mag-trade or magbentahan tayo in between $88. Kasi between 85 to 89 eh. Pero ayaw pa rin ni Beta. Okay? What will be the loss in potential profits for the company as a whole? So magkano yung effect ng transfer price na to? At magkano kapag hindi siya hindi natuloy, magkano yung magiging loss in potential profits niya? So what we'll be discussing here is about effects of transfer price on profits. Okay? Sige. So for us to be able to compute for the overall effect of the company, kailangan malaman natin yung effect sa selling division at malaman natin yung effect sa buying division. Kasi i-add lang natin siya. Okay? So what is the effect on profits of selling division? Okay. So the formula here is what is the established transfer price niya is 88. Okay? Ima-minus ngayon natin sa maximum, sa minimum transfer price. Okay. Bakit ganyan yung profits niya? Remember na yung 85 na to, ito yung minimum transfer price niya. Kasi kapag nag-trade ka at the minimum, walang kikitain or walang additional profits si selling division, hindi na siya malulugi. Pero pag mas mataas yung magiging transfer price, since revenues yung transfer price sa kanya, mas mataas, that will be additional income for selling division. Sa buying division naman, itong 89, yan yung maximum mo. So anything in between, anything below the maximum transfer price would be additional income kay buying division. Okay? Kasi currently, nabebenta niya na at 89, pero since 88, for example, yung nabenta sa kanya, may cost saving siya. Okay, so that would be anything below sa 89 sa maximum transfer price will be a cost savings sa buying division. Anything above, okay, the minimum transfer price will be an additional revenue, okay, to the selling division. So, effect on the profit selling division is an established transfer price minus minimum transfer price times number of units transferred. Okay, so that's $88, so yung established transfer price, minus $85. Okay, so meron kang $3 on top of your minimum transfer price. That will be an additional revenue for the selling division. Times number of units transferred, ilan? 30,000 units. So nakuha yung 30,000, ito. Offers to sell 30,000 at yan yung tinanggihan niya. So that's 88 minus 85 times 30,000. So that's 90,000 effect on profits of selling division na kapag hindi natuloy, yan yung potential loss in profits. Okay? Ano naman yung effect on profits of buying division? So, the way that to compute for this is maximum transfer price minus established transfer price times number of units transferred. Okay? Bakit? Okay? Kasi anything na mas mababa sa maximum transfer price is actually a savings kay buying division. So the way that we compute for this, it's $89, yan yung maximum, minus $88, yan yung established, times 30,000 units. So your potential effect on profits of in the buying division is 30,000 kung natuloy yung transfer. So what would be the effect on overall profit? That would be the effect on buying division plus the effect on selling division. So that's $20,000 plus $30,000 plus $120,000. Okay. So for us to be able to get the effect of the transfer price, we need to get the effect on the selling, effect on the buying, and then we add everything up para makuha natin yung total effects of profit. So to answer the question, assume that alpha division offers to sell 30,000 to beta for 88 and that beta refuses the price. What will be the loss in potential profits for the company as a whole? The answer is 120,000 potential loss or loss in potential profits kung hindi sila tumuloy. Okay? But there is actually an alternative solution. Okay? What's the alternative solution? All you have to do is to get the range between the max and the minimum transfer price. Okay? Para makuha mo shortcut yung overall profit. So, your max transfer price minus your minimum transfer price times number of units transferred. So what's the maximum transfer price? That's $89 minus your minimum transfer price of $85 times 30,000 units. So that's 89 minus 85 times 30,000. 120,000. So it's just the same. Okay? So if you have questions, just feel free to unmute and then just interject so that we can expound further. Okay, let's go to number 3. Refer to case number 3 shown above. Assume that beta division is now receiving an 8% price discount from the outside supplier. Letter A, will the manager agree to a transfer price? If so, what is the range within which the transfer price would be? Okay? So, ang kaibahan lang dito, may 8%, okay? May 8% kang discount which you will apply in your net purchase price. You will apply in this net purchase price to get for your maximum. Okay? Okay, for your activity today, Ferl at saka Ping, can you please compute for the minimum and the maximum transfer price, okay, given this case number 3, 150,000 capacity, 100,000 current usage, 75 selling price, 40 variable cost, 20 fixed cost, 20,000 requirement, number of units needed, and $75 before any purchase discount, which it says on discount I 8%. So let's answer, will the managers agree to transfer? So for you to be able to determine that, you have to determine what's the minimum and the maximum transfer price. If there is an acceptable transfer price range, then the answer is yes. If there's no acceptable transfer price, that means the answer is no. Okay? And then once you're able to compute for that, please take a picture and then send it in the group chat. We'll give you around 5 minutes to do it. Okay, I guess we're ready. Okay, so let's go to number 3. Number 3. Still, this is negotiated transfer price range. So we have to compute for the minimum transfer price and plus variable cost plus opportunity cost minus avoidable cost. Okay. And what's the variable cost? It's $40. What's the opportunity cost? Meron bang masasacrifice? So 20,000, kailangan may excess capacity pa siya which can accommodate this 20,000. So that means wala kayo sa sacrifice. So 0 ang magiging avoidable cost. Opportunity cost. And wala namang avoidable cost na given, that means 0 din. Means your your minimum transfer price is just your variable cost. This is your cost base. Now let's compute for the maximum transfer price. Sorry. And we know this is the net purchase price. This is your market based. 75 times 1 minus 8%. That's 69. So is there an acceptable transfer price range? Yes, 40 to 69. So to the question, will the managers agree? Yes, the managers will agree to a transfer since there is an acceptable transfer price range of 40 to 69. Let's go to letter B. Assume that Beta Division offers to purchase 20,000 units from Alpha Division at 60 per unit. So in between naman, from 40 to 69, ang na-establish nila is 60. Diba? If Alpha Division accepts this price, would you expect its ROI to increase, decrease, or remain unchanged? Okay, so para natin malaman kung ano yung magiging effect sa income, okay, ng Alpha Division, and Alpha Division is a selling division, we need to compute for the effect on the selling division. Effect of transfer price on profits. In this case, we'll be computing the effect on profits of the selling division. And our formula there is that magkano yung established price minus the minimum transfer price multiplied by the number of units transferred. Okay. So this is $60. Sorry, magkano? $60 minus 40 times 20,000 units. It's 40 times 20,000. 400,000. Y is expected to increase due to additional profits of 4. Okay? So, syempre, alam natin ang formula ng ROI is net operating income over average operating assets. Same lang naman yung magiging average operating assets. But since mag-i-increase yung net operating income niya by 400,000, we expect that the ROI of Alpha Division will increase. Okay. Number 4. Refer to case 4 shown above. Assume that Beta Division wants Alpha to provide it with 120,000 units of a different product from one that Alpha Division is now producing. Okay, the new product would require $21 per unit in variable cost and would require that Alpha Division cut back production of its present product by 45,000 units annually. What is the lowest acceptable transfer price from Alpha Division's perspective? So if you're going to look at the given, currently, may 300,000 capacity siya at may 300,000 usage siya. So wala na siya capacity. Kailangan niya ng 120,000. Pero itong 120,000 na to, iba daw to sa pinoproduce ng Alpha ngayon. So para ma-accommodate daw itong 120,000 of a different product, kailangan daw niya mag-sacrifice ng 45,000. So dami niya dito. It would require that Alpha Division cut back production of its present product by 45,000 annually. Okay? And itong 120,000 na to, ang variable cost niya is $21. Hindi 26 kasi itong 26 na to, ibang produkto to. Okay? So magkano daw yung lowest minimum transfer price? Lowest acceptable transfer price. What's the minimum transfer price na pwedeng ipeg ni Alpha Division kay Beta for this 120,000, given that $21 is the variable cost of this $120,000. So ganun pa rin. So this is all about special orders. Okay? So minimum transfer price pa rin ang gagamitin natin. So what's your variable cost? Unity cost, which will happen kasi may masa-sacrifice for variable cost. Okay, so what's the variable cost given? $21. Ito. And then what's the opportunity cost? Okay, that's a 50 minus ito, selling price, $50 minus 26 times ilan yung units na isa-sacrifice? Sabi daw 45,000 units. Okay, divided by ilan yung isa-transfer? 120,000 units. There. And then minus avoidable cost na wala namang binigay. Okay. We're going to compute for this 21 plus E minus 26 times 45,000 divided by 120,000 minus 0. So that's $30 per order. So that's your minimum or your lowest acceptable transfer price. So that's basically it for your transfer price. Your transfer price will actually, we were discussing about the different methods or schemes or alternatives for us to do transfer pricing. It could be cost-based, it could be market-based, or it's something that is negotiated anywhere between the minimum and the maximum transfer price. Diba? So yun. And the way that we compute for the cost-based transfer price, which is the minimum transfer price set by selling division, that's variable cost plus opportunity cost minus avoidable cost. For opportunity cost naman, that's your total contribution margin loss divided by the number of units to be transferred. Okay? And for market-based naman, and this is normally the maximum transfer price set by the buying division, which is the net purchase price that is currently being bought at the outside market of the buying division. Let's just complete the formula, okay? Because we've also learned how to compute the effect of the transfer price on the selling division's profit. And that's established transfer price minus minimum transfer price times number of units transferred. Okay. We've also learned the effect on the transfer price on the buying division's profit. So that's maximum transfer price minus the established transfer price times the number of units transferred. Okay. And we also learned the effect of transfer price on the overall company profit or overall profit. So it's just the effect on selling division plus the effect on buying division. Okay. But there's another alternative solution wherein we just have to deduct the max transfer price minus the minimum transfer price, then multiply it by the number of units transferred. Okay, so there. Okay, so that's the end of the transfer price. Do you have any question? If there's none, yeah, we'll proceed.
Sir,
Yes, go ahead.
wala po, sir.
Okay, thank you. Okay, our next topic should be multinational transfer pricing, pero medyo mahaba to. That's why I'll just post another video about multinational transfer pricing. We only have a little less than 1 hour to go before we end this session. But I do hope you're learning a lot, no, from this session on how to compute for the weighted average cost of capital and transfer pricing. Let's jump to service department charges, okay? Because as you can remember, the basic transfer pricing is normally for profit centers and investment centers. Ito yung may mga binibenta. Paano naman kung wala kang binibenta? Kung yung department mo walang binibenta, serbisyo lang ang binibigay. Okay? So yung counterpart ng transfer pricing sa cost centers or sa mga service centers is actually service department charges. Okay? So there's a rule in service department charges at ang rule doon is dual rate charging. Ibig sabihin, hiwalay yung i-charge mo sa variable cost at hiwalay yung i-charge mo sa fixed cost. Okay, let me give you an example. Okay? Let me give an example by answering 11-B1, page 513 of the same book. Page 513. Okay. So Corvanis Corporation operates a medical services department. So this is a cost center for its employees. Charges to the company's operating departments for the variable cost of medical service department are based on actual number of employees in each department. Okay? So may service department ka, meron ka ring operating department. Okay? Yung operating department, ito yung nagbibenta. Meanwhile, yung service department, ito naman yung nagsiservice. Okay? Pero kailangan mong i-charge yung ibang department, yung service department, kailangan mong i-charge yung operating department for the services that you have rendered for them. Parang ano yan, transfer pricing, di ba? Sa bawat goods na binibenta mo sa ibang department, you have to charge through a transfer price. Pero pag service ang binibigay mo, you have to charge other units through service department charges. So, ang variable cost daw should be based on the actual number of employees. Okay, palaging ganon, palaging actual dapat, actual activity. Meanwhile, the charges for the fixed costs of the medical services are based on the long-run average number of employees in each operating department. So, dalawa yung palaging dalawa yung possible na pwedeng maging allocation for the fixed cost. Itong long run average at saka yung peak period capacity. Okay, pag peak period capacity, normally percentage yung binibigay sa'yo, pero pag long run average, numbers or amounts ang binibigay sa'yo, which you have to compute for the percentage. Variable medical services department costs are budgeted at 80 per employee. Fixed medical services costs are budgeted at 400 per year. Actual medical services department costs for the most recent year were $41 for variable cost and $408,000 for fixed cost. Data concerning employees in the three operating departments follow. So meron kang budgeted number of employees, meron kang actual number of employees, at meron kang long run average number of employees. At ito yung mga operating departments mo, cutting, milling, at saka assembly, na ang magcha-charge dapat is yung service department mo, which is the medical services. So number one, determine the medical services department charges for the year to each of the operating departments, cutting, milling, and assembly. Okay, so the way that we will do this is that we will have to separate. So again, the principle that we will need to do this, that we will need to apply in a service department charges is the dual rate charging. Bakit dual rate? Kasi iba sa variable cost, iba rin sa fixed cost. Okay? So ibang rate sa variable cost, iba yung rate sa fixed cost. So let's do some segments. Cutting, milling, tsaka assembly. Okay. So the formula in service department charges for variable cost is based on actual activity or actual driver times budgeted cost, okay, per driver. So budgeted cost per driver times actual activity. So hindi pwedeng budgeted times budgeted or actual times actual. So kailangan budgeted ang cost mo, ang i-multiply mo ay actual driver. Okay, so what's your budgeted cost here per unit or per driver? That's $80. Okay, $80 times your actual driver or activity, that's 150 for cutting. Okay, and then we have 80 also times 80 for milling, 80 times 270 for assembly. Okay? So again, ang gagamitin natin is yung budgeted cost per driver, which is employees, times the actual driver, which is, ito yon. Sometimes, hindi ibibigay sa inyo itong variable cost per driver. Minsan, ipapakompute yan sa'yo. Paano makukompute yan? Bibigyan ka ng total. Okay? So sabihin na variable medical services cost budget totaled, for example, 1 million. Okay? Tapos, kukumputin mo yung per driver niya. Paano mo kukumputin yung per driver? Kunin mo yung budgeted. Okay? Tapos, yun yung magiging divisor mo para makuha, for example, 170 plus 100, that's 270, plus 280, that's 500. Okay? So, para makuha mo yung kunya, tapos binigay sa'yo 500, 40,000, 4,000. Okay, 4,000 budget. Okay, total budgeted variable cost. Ibig sa'yo 4,000. So para makuha mo yung 80, 40,000 divided by 500 na na-compute mo dito, doon lalabas yung 80. Okay? Sige, so sometimes, hindi bibigay sa'yo ng problem straight yung budgeted cost per employee. Bibigay niya sa'yo yung total, tapos kukumputin mo yung per driver na budget ng variable cost by dividing the total budgeted drivers from the total variable budgeted variable costs. I hope that's clear. Sige. So let's compute for this 80 times 150. 80 times 80, and then 80 times 270. Okay, so that's your variable cost allocation. And since this is dual rate charging, um, you have another cost that you need to charge, which is the fixed cost. Okay? So ang fixed cost naman, sabi dito, based on long run average. Okay? So ito yung magiging basis natin. So, and again, budgeted dapat. Okay? Budgeted dapat ang gagamitin natin, not the actual fixed cost. So kunin lang natin, ipoprorate lang natin itong 400,000 na budgeted based on the long run average number of employees. So 400,000 times 180 for cutting divided by, sorry, ano yung total niya? 180 plus 120, that's 300, plus 300, that's 600. Okay. And then 400,000 again, total, budgeted, times 120 for milling, over 600. Then last for assembly was 400,000 times 300 over 600. So that's 400,000 times 180 over 600. Times 120 over 600 for milling, and 400,000 times 300 over 600 for us. Okay, so you will now have your total cost allocation. Okay, so your total cost allocation for cutting is 132,000. For milling, it's 86,400, and for assembly, that's 221,600. Okay, we're able to get how we charge. Medyo straightforward lang to, ha. How we charge our operating or profit centers if ang nagpa-price naman is cost center. So that's the way that we charge departments. Diba? Dual rate charging. Hiwala yung variable cost at hiwala yung fixed cost. And then ang basis palagi is in terms of cost would be the budgeted, pero the driver would be the actual. Okay, actual for variable, and sasabihin naman sa'yo kung ano yung magiging driver for the fixed cost. It could be long run average number of employees or peak period capacity, which is expressed as a percentage. Okay, let's answer number 2. Okay, number 2, spending variance. Sorry. How much, if any, of the actual medical services department costs for the year should not be charged to the operating department? So, spending variance pinapahanap sa inyo. Okay? Magkano daw dun sa actual na ginastos ng medical services ang hindi mo pwedeng i-charge sa operating departments? Given na, ang charge mo lang naman is using budgeted, not actual. Okay, so for you to be able to compare, let's list down first your variable cost and your fixed cost and your total. Okay, and then what's your actual? How much was allocated? And the difference would be the unallocated. Okay, so what's the actual variable cost? According here, actual medical services department cost for the most recent year were $41,000 for variable cost and $408,000 for fixed cost. So your actual expenses is $449,000. Okay? Pero ilan lang yung inallocate mo? So yung variable cost mo, that's 120,000 plus 64,000 plus 21,600. Yan lang yung inallocate mo sa variable cost. It's only 40,000. Okay? And then magkano lang inallocate mo? Again, yung 400,000. Your total allocated is 440,000. So ang unallocated mo for variable cost, it's $1,000. And then for fixed cost, that's $8,000. So in total, unallocated cost is $9,000. This is actually your spending variance. Okay, unfavorable spending variance. Bakit unfavorable? Kasi may natira kang 9,000. Mas malaki yung actual mo as compared doon sa na-allocate mo or na-charge mo. So, who will be held responsible here? The medical services department will be held responsible for the unfavorable variance of $19,000. Unfavorable spending variance of $19,000. Okay? So that's how you do service department charges. Okay? So hindi pala lahat ng ng china-charge ng nai-incur natin na cost ay pwedeng i-charge. Okay? So kailangan mag-spend ka pa rin within the budget kasi ang magiging basis mo for allocation is still the budgeted cost. Okay? Nag-iiba lang siya doon sa actual activity or actual driver. There. So yon. So well, this is very straightforward. This is very direct. And a part of this service department charges ay yung napag-aralan natin sa ating cost accounting, which is yung cost allocation methods. So ano itong cost allocation methods na to? Ito yung iba't ibang way na pag-allocate. Kasi yung ginawa natin, yes, it's dual rate charging, di ba? Iba yung sa variable, iba yung sa fixed cost. Pero depende pa rin yan kung ang method na gagamitin mo is direct, sequential, or reciprocal. Sometimes, you call sequential as your step-down method, and you call reciprocal as your algebraic method. Okay, so let's try to refresh ourselves with the service cost allocation methods, which is still under the service department charges. So my reference here would be Hansen and Moen, but it was also discussed kay Ryborn, actually sa karamihan, kay Hortgren, na-discuss din siya. Okay. Let's answer. This is chapter 7. Okay, chapter 7. So let's answer this Schroeder. I don't know if I'm pronouncing it right. Schroeder Company manufactures a product in a factory that has 2 producing departments. Okay? Kay Hansen, ang tawag niya sa operating departments ay producing departments. Samantalang ang tawag niya sa service departments ay support departments. Pareho lang yun. Okay? And 2 support departments, S1 and S2. The activity driver for S1 is the number of employees, which is ito. And the activity driver for S2 is the number of maintenance hours. Ito. So the following data pertain to Schroeder Company. Okay? So ang direct cost na i-allocate ni service or support department 1 is 200,000. Ang i-allocate ni service or support department 2 is 140,000. Okay? So number 1, calculate the allocation ratios to be used under the direct method for departments S1 and S2. So each support department will have 2 allocation ratios, one for cutting and the other for sewing. Okay? And then eventually allocate the support department cost to the producing departments using the direct method. So direct method muna tayo. Kasi remember, tatlo yung method dito. Direct, step down or sequential, and then reciprocal or algebraic. Pag sinabing direct, si support department 1 will directly allocate kay cutting, at kay sewing. At si service department 2 will directly allocate kay cutting at saka kay sewing. Okay, so let's do that. So let's answer 7-8. Direct allocation ratio. So sabi daw niya, for number 1, let's compute the direct allocation ratios. Okay, so let's cut this into cutting and then sewing again. And then for S1 and S2. Okay, so ang sabi niya, ang S1 daw is actually based on the number of employees. Okay, so ano ang magiging ratio niya? So 120 over 200 kasi 120 plus 80. Paghahatian lang siya ni cutting at saka ni sewing. Okay, so 120 over 200. For sewing naman, 80 over 200. Your ratio for cutting is 120 over 200. For sewing naman, 80 over 200. So 40% at 60%. So total is 100%. Ngayon, ano naman ang allocation method naman? Or ratio ni S2, di ba? At sabi dito, the activity driver for S2 is the number of maintenance hours. Okay, so ito yan. So for sewing, that's 15,000 hours over 20,000 total. And how do we get 20,000? That's 15,000 plus 5,000. And then 5,000 over 20,000 for sewing. That's 15,000 divided by 20,000. 5,000 divided by 20,000. So that's your allocation ratio. Okay. And then sabi niya for number 2, allocate now the support or service department costs to the producing or operating departments using the direct method. So using these allocation ratios, let's allocate. Cost allocation using direct method. So ito yung mga, ito pinag-usapan natin, ito yung mga ways, no? Parang isang cost center ay makapag-charge, makagawa ng transfer price sa ibang departments. Para kumikita kabuhayan din siya. Hindi lang siya puro cost, di ba? So copy lang natin yung ito. Okay. So what's your direct cost? So you have 200,000. You have 140,000. Ito yun, 200,000, 140,000, 122,000. 122,000 and 90,500. So we just copy this. Okay. Now let's try to allocate S1. Okay, allocate natin yung S1. So, anong i-allocate natin yung 200,000? Okay? So, kailangan i-minus natin yan. Okay? Para pag ina natin, 0 na siya. Lahat na allocate na. Okay, so how do we allocate this? This one times 60% for cutting. And then your 200,000 times 40% for sewing. Okay? So kapag kinuha mo yung sum nito, 0 na. Na-wash out na. Yung negative 200,000 mo, naging positive na sa cutting, 120, at 80,000 sa sewing. Diba? Para ka lang nagpa-partnership accounting. Diba? May ganyan. Okay. And then, for S2 naman, itong 40,000 mo, i-allocate mo ngayon directly kay cutting at saka kay sewing. So you use the 75% and you use this 25% for cutting and sewing respectively. Okay? So when you add everything up, wash away yan. So 0. So lahat ng 140 mo napunta directly kay cutting at saka kay sewing. So, ang total mo ngayon, it's, so wala ka ng cost sa S1 at S2 kasi lahat na charge mo na kay cutting at kay sewing. Do you have questions for direct method? Okay, let's proceed with 7-8. Okay, under the sequential method, the department S1 costs are allocated first. Okay, so sinabi niya na una mag-allocate is S1. Okay, so calculate the allocation ratios to be used under sequential or step-down method for S1 and S2. Carry your calculations out to 2 digits. S1 will have 3 allocation ratios, 1 for S2, cutting and sewing. S2 will have 2 allocation ratios, 1 for each producing department. And then allocate the support department cost to the producing departments using the sequential method. So paano ba itong sequential method? So kung for example, ang direct method is diretso, itong 200,000 i-charge kay cutting at kay sewing. Ang S2 diretso 140,000 diretso kay cutting at kay sewing. Ang step down muna, okay, magcha-charge muna yung isang service department o support department sa lahat, including yung kapwa support department niya. Okay? And then kapag nakuha mo na yon, syempre may additional charge na si S2, di ba? Si S2 naman, siya naman yung magcha-charge kay cutting at saka kay sewing. Pero hindi na kay S1, hindi na pabalik. Okay? So mangyayari dyan, si S1 will charge S2, cutting and sewing. After that, yung total cost ni S2, i-charge naman niya kay cutting at saka kay sewing na lang. So yun yung sequential or step down. Diba? Sa problem, sinabi dito that the department S1 costs are allocated for. So sabihin ng ano sa'yo, ng problem kung sino yung una magcha-charge. Okay? Pero rule of thumb, kapag hindi sinabi kung sino una magcha-charge, yung pinakamalaking cost or pinakamalaking i-allocate, siya yung una magcha-charge. Okay? Again, kadalasan sabihin ng problem sa'yo kung sino mauuna na magcha-charge, pero kung hindi sinabi, ang rule of thumb is that yung pinakamalaking direct cost or yung pinakamalaking i-allocate na cost, siyang mauuna. Okay? So kahit hindi sabihin dito na S1 cost will be allocated first, by looking at the amounts, okay, alam mo na mauuna si S1 kasi siya yung pinakamalaking direct cost over all the support departments. Okay, so let's apply that. So let's compute first for the allocation ratio. So mag-compute muna tayo ng allocation ratio. So again, this is 7-9, number 1. And this is sequential, or sometimes we call it step down ratios. So ang una magcha-charge si S1. Okay, sa S1 na una magcha-charge. Pero instead of kay cutting, kay sewing, at kay cutting at kay sewing, magcha-charge din siya kay S2. Okay. So how do we compute for that? Sabi nila, si S1 will be charging based on the number of employees. So that's 50 plus 120 plus 80, and that is 250. Okay. So for S1, that's 50 over 250. For S2, that's 120 over 250. For S3, that's 80 over 250. Okay, so your allocation ratio for S1 is 50 over 250, 120 over 250. 120 over 250. 80 over 250. So when you add everything up, that should be 100%. And then after nun, ang next na allocate is si S2 naman. Okay? Pero si S2, ang allocatean lang niya is si cutting at saka si sewing. So, ganun pa rin, 15,000 hours over 20,000. And again, 20,000 is computed as 15,000 plus 5,000. Will not anymore consider this kasi tapos na si S1 eh. And then 5,000 over 20,000. Okay. Then 5,000 over 20,000. Okay, so when you add everything up, that's 100%. So tapos na tayo sa allocation ratios. Meron ka na for S1, meron ka na rin for S2. So the number 2 requirement is to allocate cost using sequential or step-down method. Okay, so again, copyhin natin S1, S2, cutting, sewing, there. And then yung direct cost niya, 200,000, 140, 122, tsaka 90,500. Yan. So, kinopy lang natin yung given dito. Here. So, una mag-allocate daw is si S1. So, 200,000 na yung allocate niya. Okay? Pero i-allocate daw niya sa lahat. S2, cutting, tsaka sa sewing. This one times 20% for S2. 100,000 times 48% for cutting. 100,000 times 30% for sewing. So check natin, dapat 0 ang magiging sum nito. Now, the next one na natin, i-allocate is yung S2. Okay? Pero we will not only allocate 140,000, but we will allocate the 140,000 and yung allocated na S2 sa kanya para mag-zero out. Diba? So, that's a total of 180,000. Okay? So, itong 180,000 na to, ito yung allocate natin using the allocation ratio na na-compute natin, 75% for cutting. 180,000 times 25% for sewing. Total niya would be dapat 0 kay S1, 0 kay S2, okay. So iba yung lumabas kapag step down or sequential versus kapag direct. Pero dapat 0 pa rin yung sa S1 at sa S2. Okay. Okay, last requirement, which is, I guess, this is 7-10. Calculate the allocation ratios to be used under reciprocal method for S1 and S2. Carry your calculations out to 4 digits. S1 will have 3 allocation ratios, 1 each for S2, cutting and sewing. S2 will have 3 allocation ratios, 1 each for S1, cutting and sewing. Then develop a cost equation for each support department and solve for the total support department cost. The number 3, based on the calculations requirement 1, allocation the support department costs to the producing using the reciprocal method. Ano ba itong reciprocal method na to or algebraic method? Kung ang direct, si S1 diretso kay cutting at saka kay sewing, si S2 diretso kay cutting at saka kay sewing, at ang sequential ay si S2 kay si S1 magcha-charge kay S2 cutting at saka kay sewing, then si S2 based on the total i-charge naman niya si cutting at sa sewing. For reciprocal, sabay. Okay? Sabay na si S1 ay magcha-charge kay S2, cottage at sewing. Ganon din si S2, magcha-charge din siya kay S1. Okay? So reciprocal sila. Magcha-chargean sila. Parang ano yan, parang love, reciprocal. Okay? Kailangan pareho silang nagbibigayan. Unlike yung si sa sequential, ang nagbibigay lang sa kapwa support department is si S1 lang. Pero si S2 hindi na siya nagcha-charge back. Okay? Pero sa reciprocal, pareho. Si S1 magcha-charge kay S2, si S2 magcha-charge kay S1. Tapos yung total cost nila, yun yung charge nila kay cutting at kay sewing. Okay? Sige. So with that, we will have to make first, sabi dito, allocation ratio using reciprocal or sometimes this is called algebraic method. Okay? Iba-ibang author kasi, iba-iba yung tawag niya. Pero same lang naman. Algebraic allocation. Okay? So S1, S2, cutting. Okay, so gawa na tayo ng allocation. So we have S1 and S2. Okay, alam natin na si S1, ang basis niya is number of employees. Diba? So, ang charge niya kay S2 is 50 over 250. Same lang kanina. And then 120 over 250. And then 80 over 250. Okay. So, S1 will charge S2 50 over 250. 120 over 250, and then 80 over 250. Now let's go to S2. Okay? For S2 naman, we will take into consideration itong 1,200. Okay? So S2 will charge S1, cutting and sewing. So that's 1,200 over 12 plus 15 plus 5. That's 21,200. And then 15,000 over 21,200. Okay. And then 5,000 hours over 21,200. So S2 will charge S1 1,200 over 21,200. And then S2 will charge S2 will charge cutting 50,000 over 21,200. And then sewing will charge, S2 will charge sewing 5,000 over 21,200. Okay, so that is now your allocation ratios. Okay. Number 2, develop a cost equation for each support department and solve for the total support department cost. Okay, because the next step, kapag nakuha na natin yung allocation ratio, the next step is magkano yung total na i-allocate ni S1 at S2. Consider yung nagbibigayan sila. Hindi na natin siya ginawa dito kasi madali lang naman eh. I-add mo lang yung sa S2, 140 plus 40. Pero sa algebraic, kailangan gumawa ka ng cost equation. Okay, kailangan gumawa ka ng algebraic equation para malaman mo kung ilan yung total na i-allocate ni S1 at S2 considering na nagbibigayan sila. Okay, so for number 2, okay, for number 2, this is cost. Okay, so ano yung mga cost equation natin? S1 is equal to, ano yung total? So ano yung dalawang, ano natin? Magiging cost equation? So that's ang cost ni S1 na total na i-allocate would be 200,000. At saka yung kay S2 naman would be 140,000. Ba, ito yon, 200,000 at 140,000. Pero, i-add mo kay S1 yung i-allocate ni S2. Okay? Which is 0.566%. 0.0566, okay, times yung total ni S1. Okay? Not necessarily 140, okay? Because yung sa S1 hindi siya 140 kasi alam natin na this 140 naman ay i-add natin yung i-allocate ni S1 kay S2. Okay? Which is 20%. Okay, so 0.22, okay, S. Okay, so yan yung cost equation, di ba? So pwede kong actually gumawa ng algebraic equation dito, yung elimination, yung may multiply ka dito, or pwedeng straightforward na lang, di ba? Mag-substitute ka na lang instead of elimination, kasi napag-aralan nyo dati sa high school ninyo, di ba? That you could actually just multiply something here and then you'll be able to eliminate. But you could also do substitution. So for S1, since dalawa lang naman to, that's 200,000 plus 0.0566. Ayan. Tapos i-substitute mo yung S2 with this equation. Para yung line mo, yung yung iyong cost equation would all be about, ang variable mo na lang doon natitira is S1. So substitute this S2 to this cost equation. So that's 140,000 plus 0.2000 times S1. So ayusin ko lang. So yung S2, itong S2 na to, sinubstitute na natin itong itong equation ng S2 dito. Okay, para ang variable na natira mo dito is all about S1. Okay, and then combine. So 200,000, kasi maka-algebra, no? Times 0.0566 times 140,000. So if we're going to compute for it, 0.0566 times 140,000, that's 7924. Okay? 7924. And then multiply mo naman yung 0.0566 times the 20%. So that's 0.01132 S1. So let's do the transposition. Ita-transpose natin to dito sa kabila. Okay? And since this is positive, when we transpose algebraic equation to the other side, mag-iiba na yung sign niya. Okay? So instead of ipa-plus mo siya, ima-minus mo na ngayon siya. So ang lalabas diyan, minus 1, it's 0.98868 S1. Okay? And then, pagsama mo na yung 200,000 at saka 7,924. There. And then, cancel out mo yung 0.98886 by dividing both sides. So, para lumabas would be 207,924 divided by 0.98886. 868. That's 210,305. Okay, so that's your total cost na i-allocate mo for S1. Not only 200,000, but 210,305. Kapag na-compute mo na yung isa, okay, yung isa, madali mo makocompute yung pangalawa kasi meron ka ng value for S1. So for S2, it's just this 140,000 times 140,000 plus 0.2, okay? But since may value ka na ng S1, you can actually substitute 210,305 for you to be able to get your total cost to be allocated for S2. That's 140,000 plus 0.2 times this one. That's 182,061. Okay? So since alam mo na kung magkano yung allocate mo, then you can start your allocation. So number 3, based on the calculations in requirement 1, calculate the support department cost to the producing cost using the reciprocal method. So number 3, so cost allocation using reciprocal or algebraic. Okay? So yun pa rin, copy natin S1, S2, cutting, sewing. Ang direct cost niya, this one. Given to, di ba? Okay? So, let's allocate. Kahit ano mauna, okay lang yan. Pero, let's just follow kung ano yung nauna, S1. Di ba? So, then, instead of 200,000 ang i-allocate mo, ang i-allocate mo ngayon is 210,305. Kung ano yung na-compute natin kanina. Okay? So, let's allocate this 210,000 based on the allocation ratios which we have computed earlier. So for S2, that's 210,000 times 20%. Okay. And then for cutting, 210,000 times 48%. For sewing, that's 210,000 times 32%. Okay? Sige. So kapag kinuha mo yung sum niya, kailangan 0 pa rin siya. Then for S2 naman, okay, for S2, well, you can actually add this up na lang, diba? Which is 182,061, or pwede mo gamitin kung ano compute mo dito, which is also 182,061. Okay? Same lang siya, 182,061, this one. Now, you allocate now this 182,661 to S1, cutting and sewing, using the allocation ratios na na-compute natin sa taas kanina. So for S1, that's 182,000 times 5.66%, 10,305. For cutting, 182,000 times 70%, that's 128,000. And for sewing, that's 182,000 times 20%. Okay? So, malalaman mo na tama yung sagot mo kapag kinuha mo yung total at walang natira sa iyong S1 at S2. Ayan. Ay, may isa natira. Anyway, rounding error. Okay? Rounding error na lang yan. Yan, napahiya ako dun Pero anyway, rounding error lang naman yan. Alright. Sige. So, that actually ends our service department charges. So for a cost allocation, service cost allocation method, you can actually allocate it based on direct method. You can actually allocate it using sequential or step down, and you can actually allocate it using reciprocal or algebraic method. Okay, so and always remember that when we do service department charges, we need to do dual rate charging, where variable cost and fixed cost are uh, are allocated separately. Okay, but you cannot allocate everything because what you can only allocate is based on the budgeted cost, not actual cost. But you have to multiply this budgeted cost with the actual driver. Okay, yeah. Whatever is left, okay, from the actual is actually your spending variance, and who will be held responsible? The service department. There. Okay. Actually, that wraps up our meeting for today. For multinational transfer pricing, we will be discussing this later on, and I will just inform you if um, the video for that is already uploaded. So basically, our coverage for module 2 is decentralization, segment reporting, ROI, RI, and EVA, cost of capital, then basic transfer pricing, cost-based, market-based, negotiated, and then service department charges, service cost allocation methods, and multinational transfer pricing, which we are yet to discuss. Don't forget to answer your enabling assessment, but I will be extending the deadline again. But the deadline will still be the same, but I will just be allowing a late submission without any penalty to give you more time understanding the topic. As I know, aside from this being complicated as the other accounting subjects, this is also wide in terms of scope. So yun. So naka two modules na tayo, and I do hope that you're able to learn a lot from module 1 and module 2. So there. And then do you have any questions before we dismiss? Okay, if you don't have any question, maybe for your last response. Sorry. Wala na.
About po dun, sir, meron po akong question.
Go ahead.
About po dun sa exercise, sir, sa SB, magbibigay po ba kayo, sir, ng answer key doon, or yung exercise problems po na pinost na, sir, sa FB, ay sa FB, sa SB, sorry,
As
sa
SB, ang
SB.
exercise, yung parang ganito, yung itong practice problems natin.
Yes, sir.
Yes, I'll be posting this practice problems, itong lahat ng to. Itong Excel na to, I'll be posting it kasama ng mga other materials that are under lesson proper and learning activities.
Okay po,
So,
sir. Thank you po.
you're welcome. Because I know that this subject, this is not something that can be understood in one sitting or in one viewing or in one listening. So, kailangan talaga aside from watching, rewatching, reviewing, di ba? You also need to practice because yun talaga, practice makes perfect. You know, it took me years para ma-master itong subject na to, and I know how difficult this is, but sabi nga nila ito ay ginawa ng tao at kayang maintindihan ng tao. So talagang kailangan talaga natin mag-invest ng time at saka ng effort. So yun. Okay, sige. So and then yun. So for your last response na lang para makompleto na lang natin. Can you please siguro write down one significant learning, number one significant learning that you have for today, and then number two, what would be the item in module 2? Okay, ito lahat ng lahat ng topics natin in module 2 na mukhang kailangan mong balikan at pag-aralan ulit. Okay, so 1, 2. Okay, so 1, what's your significant learning? Then number 2, yung topic. So number 1, ano yung significant learning na topic mo? Okay, and then number 2, anong topic naman dito yung mukhang kailangan pang balikan at pag-aralan para ma-master mo. Okay? Then once you're done, you could actually log out na. And thank you very much. And good luck to your enabling assessments. That will be your second part. And last pala, for enabling assessment number 3, kasi kailangan talaga tatlo talaga enabling assessment natin sa midterm. Kaya lang, hindi natin matatapos yung module 3. Kalahati lang. So what we'll be doing for module 3, for enabling assessment 3, that will be a comprehensive enabling assessment covering module 1, A, 1B, 2A, 2B, and 3A. Okay, pero still 40 items pa rin. So yun. So just to refresh everything that we've learned during the midterms. Okay, so once you're done, you could actually send already a you can actually send already your screenshot. Paano lang, pasulat na lang, tapos picture, and then send na lang to the group chat, and then you have your response already. Okay, so with that, I would like to thank you for joining me, and have a great night and great week ahead. Bye, Ping. Bye, Pearl.
Thank you
Thank you
po,
po,
sir.
sir.
Thank you.
Bye-bye po.
Bye-bye po.